Hey everyone, Plug Power reported third quarter earnings results that sent the stock price crashing 43% on the day after these announcements were made. Now, I've been warning investors to avoid Plug Power stock for several years now. The company's losing a lot of money on the bottom line. So in this video, I'm going to update my recommendation of Plug Power stock. You're going to want to tune in to see if I'm keeping this stock rated as an avoid or sell or hold, not a buy, or if finally this 43% stock price crash makes the stock worth buying. Is it now a good buy on the dip because the price is so much lower? Well, that's what I'm going to answer in this video after I review the company's latest quarterly update and take a look at why the stock price crashed by so much. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Plug Power reporting third quarter 2023 revenue of 199 million and making an announcement saying overall their financial performance has been negatively impacted by unprecedented supply chain challenges in the hydrogen network in North America. Now, excuses has not been a new thing, unfortunately, for Plug Power. They've made lofty expectations and lofty targets and continuously delayed or under delivered after over promising on their targets, and this is yet another example from Plug Power. So the liquid hydrogen market in North America has been severely constrained by multiple frequent force majeure events, leading to volume constraints, which has delayed Plug's deployments and service margin improvements. Remember, all year long, Plug Power was telling investors that its gross profit margin was going to improve in the back half of 2023 because it was going to bring online its Georgia facility and that was going to improve its gross profit margin. Well, here we are in the back half of 2023 and we get another excuse from Plug Power telling us that what was actually going to happen didn't happen and telling us because it was factors outside of its control. So again, Plug Power updated investors on its Georgia green hydrogen plant and it said it's nearing major milestones. We are completing the final step of the commissioning process for the liquefiers and the cold box. The liquid production is anticipated between November 15th and the end of the year. Now, Plug Power has been telling us that they're in the final stages approaching bringing this hydrogen plant online, but it keeps getting delayed and it keeps getting pushed out. At this point, I think investors just want to hear that this facility is up and running and producing now instead of continuously telling us that it's almost there, we just need to do this, we just need to do that. Well, just get it up and running already. This has been something that you've been working on all year long, at least, trying to produce the final stages and get this thing going. And investors are losing patience. Investors are losing patience. You're burning through hundreds of millions of dollars every year, and investors want to see results. In the third quarter of 2023, the company incurred a non-cash charge of 41.6 million. This charge reflected the projection for future costs to service their existing fleet through the remainder of their service contract. The severe hydrogen shortages have negatively affected direct cost of service as well as the timing for implementation of fleet upgrades into customer operated equipment. Another thing from Plug Power where it said we expect to achieve these positive results. Oh, but it turns out it's not going to be as good as we thought. We need to take a write down of another 41.6 million. And I talked a little bit more about this in a video I did about Amazon. I think it was a week ago. I'm not if you remember watching that. And Amazon came out and said, you know what? We've invested millions of dollars in improving our logistics system and we thought it was going to deliver a certain amount of improvement in our speed to delivery and in our profitability. Well, it turns out better than expected. It turns out that these improvements that we've made in our logistical facilities are actually helping boost profitability more than we thought, and it's increasing the speed of delivery more than we thought. right? So that's an example of what you want to see from a company where they tell you they're going to plan this thing and they're going to make this investment, and then they come back to you and they report that the investment worked out, that it was better than expected, that it's already delivering results. And when you go check in the financial statements, you see, oh, Amazon's operating income jumped by more than 5 times from the same quarter the prior year. So you're seeing evidence of the company making effective investments and things working, right? That's what you want to see as an investor. Unfortunately, you're getting the opposite of that from Plug Power. Is they keep telling you they're making this investment and it's going to bring in a certain amount of production, certain amount of revenue, and it's going to help boost profitability and cash flow, and they keep coming back to you as an investor and saying, well, it's not happening the way we thought, and trying to blame others and trying to blame macroeconomic factors and other reasons why this is not working out. The bottom line is that it's not working out. They've continued to make millions and hundreds of millions, if not billions of dollars in investments trying to build out this business, and it keeps coming back negative and negative and negative. So, given their forecasted capital expenditure and operating requirements under their current business plan and the company's existing cash and liquidity position, the company will need to access additional capital in the market to fund its activities. Boy, is that a nice way of putting it. In other words, what they're saying is we're losing so much money in our business and we don't have enough money to continue. We need to come back to you, friendly investor, and ask you to give us more money. We're going to need more money to continue losing more money. And investors hopefully are going to tell Plug Power, you know what? I think we've had enough of this. I think we've had enough of you telling us that you just need a little more money to get over the hump. You just need a little more money to get you to that next stage, to that next milestone, and then you're going to start getting the business on a more sustainable path. Unfortunately, it hasn't happened yet. And so I'm hoping that Plug Power can access one of these other sources of funds, and namely the government, right? The US, they're looking to the US Department of Energy for a loan. They're looking for equity partners, right, to finance these projects as a partner. And they're looking for the guidance from the Inflation Reduction Act, offering tax credits to help get this company up and running. And there, the new announcement, the DOE announced 7 billion for regional hydrogen hubs. And I think that needs to be the solution for this company, is that it's going to need massive amounts of government help to get it up and running, to get it to a point where it can be self-sustaining. Because I think investors are growing tired of this company, are growing tired of continuously pouring money into the company. I think it will need to be the government to step in and help this company get itself to the point where it can sustain itself. And at that point, investors and the government won't need to keep putting money in because the company will be self-sustaining. And overall, it'll be a good thing for the world because it'll produce cleaner energy. It'll produce cleaner energy. So hopefully they are able to tap into one of these government sources for funding and get itself to the point where it can be self-funding. Because if I show you the company's operating income chart over the last 10 years, you can see it's just going in the wrong direction. And then ever since the boom in investors' beliefs in renewable energy in 2020, during the pandemic, they got an influx of capital and they've just accelerated their cash burn and accelerated their losses after 2020 because they've put in more investment. They accelerated their timelines and just started losing even more money. And in the most recent trailing 12 months, they lost $777 million, the most they've lost in the last 10 years in the trailing 12 months. So unfortunately, it's not getting better for Plug Power, it's just getting worse, and it's getting worse at a faster rate. So to update my recommendation of Plug Power stock, I will say no, this 40% decrease is not an opportunity to buy the stock. I still think investors should avoid this stock. I think there's better ways to invest your money to benefit from the growth of renewable energy, and Plug Power stock is not one of them. But before I let you go, if you gained any value from this video, please subscribe to the channel. It'll really help me make more videos just like this one. Thank you so much for watching.